Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the recent price action and what I think is likely to happen next here. I am still under the weather quite a bit, so I'm going to try to keep this snappy and kind of to the point, so hopefully it covers all the kind of recent questions and things that I think are going on in the space for Bitcoin. But if not, do let me know in the comments down below or join us down in Discord and we can try to answer any of those questions down there as well. If you find it useful and informative, smash that like button. I do appreciate that. And let's get into it. Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. And, you know, we're just going to kind of reflect on where we have been. And, you know, we actually pushed up a little bit higher than expected yesterday. So yesterday we were kind of talking about a three-wave structural point here. Let me go check where we were kind of estimating that to go, just to refresh my memory because I deleted everything as I wasn't thinking clearly. Oh no, we actually are a little bit lower than expected there on that one, but we obviously did have more bearish situations mapped out. If I remember rightly, we actually had this low point here, we had also this high point. We were looking for a break above either of those or below those, and we can see that we did break up higher. We also had scoped out, I think, this one here and this one down here, and we were saying, you know, we're looking for either a break down here or a break up there, and to kind of figure out what was going on. It's possible that we went in both directions. I actually thought it was more likely that we were going to break down here before going up, but you know, you can't predict these markets 100% of the time, and I was wrong on that one. We can quite clearly see that. So here we can see that we did have this move to the upside. Now from a larger perspective, we can kind of put in our wave counts here, and we can kind of see that from this low point down here up to this high point is a wave. We come down into our B wave down here, and we should be aiming for around the 21,362 on the 1-to-1. And again, this actually puts us right back up into this supply area, right? We can see that we did wick into at the moment, just actually getting rejected from the 786 at 21,000. This is the 21,191 to 21,468 area. This is an area of kind of selling pressure where we kind of think there's kind of reaching an upper limit. We refined that down to this slightly darker yellow area, this one being 21,308 to 21,478, and then of course we had those higher expectations up here at 21,557 to 21,774, which obviously we can see we've double tapped into that area. So we are still looking for this slightly refined move to the upside. That hasn't changed, but we do need to keep an eye on the internal count. So I'm going to remove these dashed lines now and just remove those. We don't need those. We want to see whether or not this is giving us any kind of ground to think impulsion. And, you know, we've got overlapping wave one. It's not terribly too much of an issue, providing it's a diagonal. Wouldn't really work very well if it was anything other than that, though. So if we go ahead and pull this in, you know, I think the untrained eye would want to kind of call that 5 waves. I don't think that's really a good idea, but we'll go with the premise that it is. And here we can see we didn't really go up high enough to reach the kind of expectations on those highs. So we'll keep that in mind. Now, my biggest concern is that we've met the minimum requirement of the C waves up here, or the C wave up here. Okay, so we don't really have to go up higher. Now, I know you kind of want to go 1, 2, 3, 4, and 5, but it's not valid. So we haven't reached the 5th wave expectations. We come down here and we overlap here. So the only other way of thinking of this would be as a diagonal, but then it would be a very strange place to have a diagonal in a wave 3 kind of situation, or even in a C wave. It would be strange. So I don't think really that's a valid thing. So I'd say we're probably just looking for C waves, or more specifically, we could look at it maybe as a W, X, Y, X, and Z if we do end up pushing up into that little bit mover there a little bit higher. Now, the concern is obviously that actually we just completed our C wave, right? We could potentially say our C wave was complete here, and now we're starting to move down because, again, we don't really have definitive counts in here, and we are lifting up that stochastic RSI as well. So instead, you know, we might be thinking this correction down yet actually has further to go, where we can see this potential move coming down maybe towards 20,790, for example, maybe even a little bit deeper. I will go ahead and actually just put a little box in there so we can kind of scope that out as, you know, 20,708 to 20,790. If I remove that, you can then kind of see that potential move. Now, if we do that, then actually I'd be more inclined to think, okay, slightly more bullishness to be here, and we actually come up into some kind of structure like this, right? And we lift up right back up into maybe even this higher range, or come back and retest some of these additional kind of yellow box areas here. So yeah, I think if we do come down and we do hit this low around 20,700, then actually that would give me ground to think, yeah, we could actually potentially have a little bit more bullishness and a bit of a move upwards. Failing to do so though, and actually just going straight up here, I would flip this and I would say actually it might be more that actually we end up doing something like this and we come down. So one of those, keeping an eye on it. This could go a couple of different ways, and it's definitely not an easy market, specifically as we kind of consolidated around here. One of the things I do want to kind of point out is that if we do break down here and the market isn't looking overly too positive, one of the things that we should probably be aware of is this is more like a bear flag situation. Obviously, we did have a lot of foolish people, I think, in the space saying that this is a bull flag, which it is not. This is not a bull flag. They do not tilt upwards, despite what people might want you to think. They do not. They actually only go down. Now, what we do have is a bear flag situation. Bear flags tilt upwards, okay? This is why you often see me saying higher highs and higher lows, they break to the downside, right? And that's kind of what you see. So if I actually draw this in here, you can kind of look at it in multiple different ways. I don't really like it as a bear flag, but it's something that might actually happen if we do pull down into these kind of low ranges. For example, if I were to figure out a way of adjusting this trend line, you can kind of see it as a situation. Now, when it comes to bear flags or just a flag of any sort, one of the things that we need to be aware of is the setup to this. So a pole should have high volume, and the pole is going to be this little area just here. Okay, so this pole coming down, this should be an area where you have high volume, and that's exactly what we see here. And then of course the actual flag part of this, which will be the kind of part that kind of goes on the diagonal up here, this should have lower volume than the pole, and it does. It meets these requirements. Not only does it tilt in the correct direction, but you also have volume stacking in the right direction. So I'd be cautious here. Higher highs, higher lows, I often say they break down, they don't break upwards. So we should be aware of that. Now obviously you can kind of bounce around for a bit, and we could retest these highs before moving back down. That's also possible, but I do think it's worth noting that it doesn't look overly too great on this hourly chart at the moment, right? We've progressed upwards without doing terribly too much in the way of price movement, and so the momentum isn't really behind the price, the volume's not behind the price, the sentiment isn't really behind the price. There's just a little bit of foolishness thinking that we're in a bull market. So I think it's important that we kind of reflect on that. I do expect us to kind of bounce around a little bit here. I'm not expecting us to kind of rapidly move, but on the back of the Genesis chapter 11 filing, that could also add a little bit of fuel to the fire. Not so much on the news of it, but the actual output of the domino effect of what that could have happen to other companies that are associated with, in the same way that we have with FTX Alameda Research, right? Those are still underway, and there's a lot of things to kind of be talking about there as well. And it's more about the companies that are affiliated with and have a knock-on effect, a domino effect to it. So just kind of keep these things in mind, right? I think there's a lot of reason to think the price is unstable at the moment. I think that's a pretty fair statement to say, and we're just waiting for the right kind of knock. It can go in either direction based on FOMO for sure. We can ride it up a little bit more. I'm not saying that we can't, but at some point this is going to have to come down. It's going to have to come down pretty hard. I'm not saying necessarily new lower lows, but I do think that that's the most likely scenario, but essentially then the market is fragile, the sentiment is fragile, and the Elliott wave theory is telling us that it's fragile. It's saying that we're coming towards end of structures, and things are about to reverse. We just need a nudge in the right direction. Like I said, we can continue running to the upside, but I don't think there's terribly too much further for this to go. A lot of the retail investors are exhausted at this point. That's why the volumes are down low. Institutional players simply are not buying, at least not at the moment. And they're waiting for more bleeding to occur within the retail side before they can actually accumulate anything. So for the most part, my expectations are that we're just going to kind of hover around here, kind of the $20,000 to $21,000 range for a little bit longer, and then eventually whatever news or event occurs that just knocks this down, it's going to happen. So very incredibly fragile. Now, if I come up into our daily, you can see that we are still fighting the 200 EMA. You can see it right in here. The white line is the 200 candle average, exponential moving average across the 200 candles. And you can see that we're pushing and fighting, but we are overbought, and it's not looking great on the daily chart. From a weekly standpoint, the 200 EMA is significantly higher, but we are looming on a death cross, not looking great there. You can see this, to me, looks like a B wave movement with a C wave coming down into new lower lows. So we can think about what that might mean later on if we want to. It doesn't have the internal workings of a impulsive 5-wave structure, so I do not think we're trending to the upside here. We are, of course, up in the overbought area. So like I said, we can continue to kind of push up a little bit more, but at this point in time, it's not looking overly too positive, and we should be cautious. Okay, it's probably the easiest way to kind of say it. Now, if I zoom out of this weekly chart for a moment and just kind of point out a couple of key things, last time that the weekly stochastic RSI was as high as it is, we were just about to have that drop down in November for the FTX side of things. The time before that was August. The time before that was up here, right up the top here, in April of 2022. What is the key thing that's always the common denominator between all of these variables is that when we're up in the overbought area and times are bearish with lack of demand, which is where we are, things have come down pretty hard from this overbought area. I do not think this time is any different. I would say that if anything, we are likely to see more to the downside than we had done previously, because I think there isn't terribly too much more that retail investors are willing to hold on to. I think that they're going to get incredibly fed up, frustrated, thinking that this is going all the way down to some really ridiculously low level, which I do not think will happen, but it will scare people out of the space and thinking that they can buy back much cheaper later on, only to get kind of priced out of the market as the market almost instantaneously reverses on them and goes in the opposite direction at some other key level that they thought was too high. Now, I do not think that's 15,500. I'm willing to say that if it turns out that is, and whatever this retracement happens next, it could be a fantastic opportunity to get close to that bottom. If you will remember, we do not try to buy the bottom. We do not try to sell the top. What we try to do is get in and around both of them, right? We want to be selling close to the top and we want to be buying close to the bottom. Very few people ever actually get these tops and bottoms. We want to make sure that we are as close as we can to them. So either confirming a trend upwards and buying the dip afterwards, or alternatively waiting for a good end of structure to the downside and looking for that swing trade opportunity. I'm going to leave this video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not subscribe? Join us down in Discord, linked in the description down below, guys. Until the next one, have a fantastic day.